This is Bob Platt at the Institute of Directors with a special business vidcast, getting reaction to the latest rate cut by the Bank of England. With me is Graeme Leach, Chief Economist of the Institute. Now, earlier, Graeme, in the year, the IoD was cautious over rate cuts. So how do you respond to this 1.5% cut?
Well, that's right. We were cautious then. Inflation was the greater concern in the early part of this year. But times change, events move on. As Lord Keane said, if the facts change, I change my mind. What do you do, sir? And in the same circumstances, we want now to see an aggressive move by the Bank of England. We called for a 1% reduction. We've got a 1.5% reduction, and that is a very good move. Very good move. Why? Why should firms like that? Because the quicker we get interest rates down, the more we can avoid a long and deep recession. What we want to see is a short and shallow one, and bold, aggressive moves now can help that.
So why has the Bank of England made this one big single cut?
A number of reasons. First of all, they're not at all confident that all of this cut will be passed through to consumers and companies. So going with 1.5% may mean they only get 75 basis points passed on. On top of that as well, I think they want to give a positive shock to the economy. There have been so many negative shocks in recent weeks and months that they want to do something positive to change the consumer confidence and corporate confidence. On top of that, they want to see, they're showing that they believe inflation is yesterday's story and the risk for tomorrow is deflation. So again, it's tied in with this positive shift. They've got to adjust people's behaviour, because if we get into a serious downturn, it becomes very difficult to get out of it. And there are other factors as well. The household savings ratio is around 0. It doesn't need much of a spike in that to really slam consumption. And as business investment intentions surveys show, indeed the latest IoD investment intentions survey shows that we're in completely uncharted territory. Intentions have collapsed, and business optimism has collapsed as well. Business performance is still holding up, but the future outlook looks pretty gloomy, to put it mildly. And of course, we're all worried about the housing market. What will happen to prices there? Will there be an acceleration in the downfall of prices? So you put all those together, you stir them around in the pot, and it means an aggressive mood. And what we can also say is this is likely not to be the last aggressive downward move. We think by this time next year, interest rates could be below 2% easily, and possibly as low as 1%.